All right, let's talk about a trading strategy that's a world away from the frantic day-to-day grind. We're diving into position trading, a powerful way to capture the market's biggest, most significant moves over the long haul.
I mean, are you just exhausted from being glued to your screen, stressing over every little tick? What if there was another way to trade? A method that lets you step back, take a breath, and focus on the real trends that actually move the needle. So to really get this different approach, we have to start with the core idea itself. What does it actually mean to trade the big picture, instead of just getting lost in all the daily noise?
Well, at its heart, position trading is really the art of patience. The goal here isn't to scalp a few points here and there. Nope, it's about spotting a massive, unfolding trend and riding that wave for everything it's worth, while learning to completely tune out the short-term static.
And believe me, when we say long-term, we really mean it. A single position trade isn't about what happens today or tomorrow. We are talking about holding on for weeks, months, sometimes even years. These trades are driven by huge economic shifts, not by this morning's headline. This quote says it all, doesn't it? This is the entire philosophy wrapped up in one sentence. Every single decision a position trader makes comes right back to this idea. Forget the small wins and focus all your energy on capturing that one monster trend that can make your entire year. Okay, so how in the world do you find these big moves? Well, it's definitely not about luck or guesswork. It takes a very specific set of tools and a kind of multi-layered way of looking at the market, which we're going to break down right now.
You know, success here really depends on combining these three different ways of looking at things. You can't just rely on one. You need to see how the charts, the real-world economy, and what everyone else is thinking all line up to tell you the same powerful story. First up, on the technical side, we're zooming way out. Forget the 5-minute chart. We live on the weekly and monthly charts. Here, the 200-day moving average is king. It's like a simple line in the sand between a long-term uptrend and a downtrend. Then we look at support and resistance levels that have held up for years. And this part is absolutely critical. The fundamentals are what actually create these massive trends to begin with. A single decision on interest rates from a central bank, a big shift in inflation, these are the things that can set a market's direction for years. This is the why behind the entire move. And finally, there's sentiment. This gives us a little peek behind the curtain to see what the big money is up to. By looking at things like the Commitment of Traders report, you can see how huge institutions are positioned. It's a great way to confirm if the heavy hitters are on the same side of the trade as you. Now, this all sounds pretty fantastic in theory, but let's be real. It is not always a smooth ride. Just like any strategy, position trading comes with its own unique set of challenges. So to give you the full picture, let's talk about the incredible highs and the very real lows. The upside is amazing, no doubt. We're talking less screen time, way less stress, and the potential for profits that can be genuinely life-changing. But the trade-off is serious. You need a good amount of capital to ride out the swings, and you absolutely must have the mental toughness to watch your trade go against you, sometimes for weeks, without freaking out. And that is exactly why risk management isn't just a good idea in this game. It's everything. It is non-negotiable. Because you're holding on for so long, you're exposed to all sorts of unexpected events. You simply cannot afford to be sloppy with your risk. So, how do you survive the volatility? Well, you do it by keeping your position sizes manageable. A common rule of thumb is to never risk more than 2% of your entire account on any single trade. That way, even if you're dead wrong, you survive to fight another day. Now, this might sound a little bit backward at first, but your stop losses have to be huge. We're talking 500, maybe even 1,000 pips wide. Why? Because you have to give the trade room to breathe. The whole point is to ignore the minor pullbacks, and a wide stop lets you do that without getting shaken out of a perfectly good position. All right, theory is one thing, but let's make this real. Let's look at a concrete example to see how all these pieces, the fundamentals, the technicals, and of course the patience, all come together in the real world. Okay, let's jump in a time machine and go back to 2020. The pandemic hits, and central banks, especially the Fed in the US, start printing money like there's no tomorrow. For a position trader, this was a massive fundamental signal. It screamed long-term inflation and a weaker dollar, which is the perfect recipe for gold to take off. And what was the result? Well, traders who saw that fundamental shift bought gold and then had the patience to hold on through all the ups and downs for 2 years. They could have captured a staggering 40% return.
on a single trade. That right there is the power of this style.
So where exactly does position trading fit in with all the other ways to trade? As you can see, it's way over on the far end of the spectrum. We're talking the longest holding periods and the fewest number of trades. But it often comes with the highest potential reward for each one of those trades. It's just a completely different ballgame. And that brings us to maybe the most important question of all. We've talked about the what and the how, but now we need to talk about the who. Is this strategy actually a good fit for your personality?
Because here's the bottom line. Short-term trading is a game of speed, of quick reflexes. Position trading, this is a game of deep research, incredible patience, and an almost unshakable belief in your own analysis.
To really succeed with this, you have to be the kind of person who stays calm when the market is going crazy. You need the discipline to just tune out the daily news chatter and the confidence to stick with your big idea for months on end, even if it's not working out right away. So that's the ultimate question you have to ask yourself. Because in the end, position trading isn't just a strategy on a chart, it's a test. It's a test of your patience, and more than anything, a test of your conviction. Do you have what it takes to tune out the noise and see it all the way through?